And thus, part two begins. We have here before us the minute bar chart of this week of the ES. And generally speaking, it was down, clearly. It was down something like 35 points. But my goodness, what a roller coaster ride. I mean, I stopped trading the ES and NQ well over a year ago, maybe a couple of years ago, because the leverage and the volatility and the overnight shenanigans just got to be too much for me. And it's weeks like this that I'm really glad I did, because you can see in retrospect, and charts always in retrospect make a lot of sense, but you can see this nice clean baseline at about 1327 or so. And once broken, it just kind of tumbled. And this was a nice little waterfall decline. But then we got the counter trend. Again, very pretty. I thought it might actually go really muscle its way back up to that breaking point, but it did not. And the really fascinating thing to me is the just more recently what's happened. Because yesterday we had, initially that rise, and then we closed. And the really curious thing that happened was when the Bonner vote wasn't going to take place, we just instantly just whammo plunged like so. And then let's see if a 1 day captures all of this. Yeah, here's the whammo. So market closed. Things are just kind of noodling along. Bonner delay, zap, and then climbed pretty much back to where the zap had taken place. And then zap number 2 was when the crummy GDP report hit. And then, someone from Congress grinned a certain way at the camera or winked or God knows what, and instantly the entire effect of the horrible GDP report and this vote delay was erased seemingly in moments. We're way up here, and then that just kind of sold off, I guess, through weekend fear. Like, not that many people were that interested in holding on for the weekend. So just an electrically crazy 24 hours in the ES. The NQ, somewhat of a similar story, except as typical these days with the NQ, a bit more strength beneath, I think, thanks to the aforementioned cash-rich Apple. And the real surprise, I thought, was TLT. This thing was up nearly 2% today. This is a bond fund. This is supposed to be really boring. And this had a sensational day. In fact, it was tremendously higher before it finally sold off here. So the bond shorts got really, really squeezed. You can see, not surprisingly, that the interest rates plunged terrifically today. So really a remarkable movement. As far as the dollar goes, not a good day for the dollar. Here's the euro showing. Here's exactly where the GDP numbers were announced, and the dollar, which is the inverse of this, sold off. So the euro went straight up. So big move there. I really don't want to do 3 videos. I don't want you guys to sit through 3 videos. So I'm going to try to pick up the pace here and just look at some stocks that I find interesting. I'll say briefly that I am pretty light now. I have 30 positions, which those of you who know me know, for me, that's almost like being in cash. I've got 30 positions, but I've got 70 waiting in the wings. Charts that, given a good rally, would be kiss them on the lips beautiful for shorting. But no frickin' way am I going to go into a weekend like this with guns a-blazing. I've got what I consider relatively safe shorts, no large positions. So here, let me just show you a few of these. AIZ, this has a couple of markings that I like in shorts right now. Marking number 1 is a tremendous fall during the last bear market. I like that. To me, that's a good sign if things got weak again. And the other good sign is it's broken some pretty important levels, this trend line and these support lines right here. So AIC is a good looking one. CRM, this is Salesforce. more simple explanation here is that it has broken this trend line, which, as back here, was a nice harbinger for the weakness to come. And each of these, by the way, has pretty tight stops. If we get a rally, I don't want far away stops. I don't want to kind of suffer through some big rise. I'd rather get taken out swiftly. CYT, this is an interesting one because not only has it broken this rather sharply ascending trend line, but it's been forming this very pretty symmetric triangle here. And if this sold off, the point drop would be pretty substantial. The measured move kind of spanning this height away from wherever it breaks. So a little bit more speculative on that one, but a very, very handsome chart. Here's a Dow, kind of good, simple Head and Shoulders 101 right here, with a rather complex pattern in this case, kind of a complex Head and Shoulders. And I'm, again, in the spirit of tight stops, I would stop, I've got to stop at 36.91, which is just above the high of the most recent shoulder peak. Google, company you've probably heard of. This has a very nice long-term resistance line right here. And if you believe that gaps always get filled, well, a gap this size has a lot of points ahead of it. So short these guys. And again, all these, I don't put like, 90% of my portfolio is short Google. These are all roughly 1% of my whole cash portfolio. LXK, I like this one because it had fallen pretty hard and had a huge rally a few days ago back up to this level. Somewhat more speculative, but I kind of like it when a stock has fallen hard and kind of clawed its way back up. There's plenty of potential, I think, for gains there. NAK, another broken trend line with a nice retracement to resistance. And being anything to do with kind of mining or minerals and so forth, I find especially attractive today. Here's kind of an unusual one, PETS, P-E-T-S. This is PetMed Express. Not a classically bearish pattern here. In fact, it's not. You probably don't really see much of a pattern at all, except for this Head and Shoulders way up high, but that's kind of been fulfilled. I like this just because from a long-term perspective, there's very little in the way of support beneath here. There's really not a heck of a lot of anything scaffolding holding this guy up, and it's got a nice tight stop on this too. I've got it stop at 1150 on this, so a lot more to gain than lose, I think, on this one. Here's one that stayed weak even until the close today. SCCO, it's a copper concern. A failed bullish breakout plus a broken trend line plus below these levels of resistance. That's just one of those shorts that might be a better long-term one. And one I know that you guys talk a lot about, SLW, this is silver related. By the way, I mean, I think another kind of accepted truth is that if there is a deal, that the appeal of gold and silver will probably tumble pretty rapidly. This is the kind of stock, and you can see the Head and Shoulders as well as I can here, that has the potential to fall real fast, real hard. So I like this pattern a lot. TNP, I think I've mentioned this before, much, much, much bigger pattern than I normally encounter. It's one of those things which you kind of have to have wider stops on just because it's so gargantuan. But this, from a long-term perspective, is a fantastic. And finally, something I dedicated a post, I think, yesterday to, XHB, home builders. From a technical perspective, lots of reasons for being short this. And even fundamentally, I don't think there's many of us that would point toward home building as a magnificent industry to be in the coming years. So that's it. This weekend's bound to be a little interesting. Next week is really bound to be interesting. And my perverse hope is that we get a nice, sharp, quick rally that I can short into. But it's a tough market to trade. I think kind of a PhD level market to trade. Very volatile, lots of mines in the ground. So hang in there, and let's continue to support one another and learn from one another and get through this. This too shall pass. So have a good weekend, everybody.